The spectre of Greek government default again raised its ugly head over the weekend. You see, it's becoming apparent that bondholders are not going to voluntarily agree to the restructuring program, which would see their returns and their value in the Greek debts absolutely slashed. The fact is, though, that the Greek government can actually force bondholders into the restructuring, but this still constitutes what's called a technical default. The problem is that any form of default means that the European Union will not pour in funds to Greece to allow it to repay its bonds, and this will lead to an actual default. So what impact did this news have on world markets? Looking at equity markets first, the ASX 200 was up nearly 15 points, and the NZX 50 was up more than 40 points. But of course, these markets closed before the speculation came through on the wire. Looking at the rest of the world, though, the Dow was relatively flat, as were most European markets. The real impact was felt on currency, where the euro fell relatively quickly against most of its major trading partners. It took with it riskier currencies too, such as the Kiwi falling through 83 cents US to level off at around 82.9 cents. As New Zealand farmers are well aware, volatility in agricultural commodity markets is a significant bugbear of the market. In a number of other countries around the world, action is actually taken in order to smooth off prices. And in the butter market, there's been plenty of action around the world. In the US, cooperatives working together have provided significant subsidies to its members to allow them to export butter and cheese to the Middle East and to Asia. Why? Because butter and cheese price levels in the US is at relatively low levels, and in order to prevent stockpiles building up, it needs to be exported. Looking at Europe, the story is slightly different. The Europeans also build up what they call intervention stocks, buying it when it's cheap and releasing it when there are shortages to effectively smooth off prices. It seems, however, that the shortage is so great at the moment that in fact the intervention stocks are all but exhausted. What this provides is possibly an opportunity for New Zealand farmers. However, the prices in Europe have to be great enough to overcome tariff entries, but let's wait and see what happens going forward.